stock to flow is essentially measuring the number of years it would take to produce the current supply of the asset. Bitcoin and gold are right around the same right now, but Bitcoin becomes more scarce over time because the number of new Bitcoins that can come into the market drop every 4 years. Bitcoin becomes a harder asset over time versus gold, which has like a 2% inflation rate or so. We're always finding new gold.
We're going to see inflation for the Bitcoin network decrease at such a level that it wouldn't even look like there is any inflation after a certain time. I mean, unless somebody comes with incredible medical innovation, Bitcoin network and the Bitcoin mining algorithm will outlive us, because the last Bitcoin would be mined in 2140. Welcome everyone to episode 5 of The Rundown with Shiv and Michael. Wow, 1 month passed by. We're at episode 5. You guys have given us a lot of love, a lot of comments on LinkedIn, Substack, on YouTube channels, on Spotify. And now we're finally going to talk about Bitcoin in this episode, since we promised to our listeners that we're going to talk about Bitcoin after speaking about all the other cryptos that we thought were useful at the time, like Ethereum, L2s, and Uniswap. So welcome, everyone, and welcome, Michael. Good to see you back again.
Great to be back, Shiv. Yeah, we're talking about the Big Daddy for the first time this week. We've talked a lot about Ethereum, L2s. We talked about Uniswap last week. We are going to focus on the OG crypto network today, and that is Bitcoin. So super excited for today's episode.
And look, what a time to talk about Bitcoin. All-time high hash rate. We are world's first Crypto Fundamentals podcast educational resource. A lot of people are looking at the price and they're like, oh, it's not all-time high. But you look at the fundamentals and you look at the health of the Bitcoin network, and it's an all-time high. It has been a great year for Bitcoin.
Yeah, no, it's been a big year for Bitcoin, Shiv. I think to sort of set the tone for our first Bitcoin episode, like, it would be great to just kind of go through some of like the health metrics to look at it, just kind of get a little health check on how Bitcoin's doing. I think starting with hash rate is a great place kick this off. So as we can see in the chart, people are listening to this. We're always pulling up charts, so always good to check the YouTube channels as well. We're looking at a chart of the hash rate. It's up since mid 2021. It's up over 500%. So the Bitcoin network is super robust, super healthy. And if anyone's wondering what the hash rate is, it's essentially the number of computer servers running Bitcoin that are essentially out there hashing on the network, using electricity to do so, and looking to find Bitcoins. And so there's a kind of an interesting relationship here as well between the hash rate and the price of Bitcoin. And as you can see in the chart, what tends to happen, and it kind of can go back and forth, but when you see the hash rate just shooting way past the price, as we see in the chart there, it's kind of an indication that the miners are really, really bullish on Bitcoin. And historically, price has eventually caught up to that bullishness. Another interesting thing here is, like we've seen, and we're going to get to this later, fees really picking up on the network as well. And that's obviously really good for miners. But yeah, curious to get your take on just the hash rate and the overall security. This is really important. This is the security of the network.
Absolutely. So just quickly, whatever Michael said, absolutely crystal. It is, in a sense, hash rate is the computing power of the overall Bitcoin network to secure the Bitcoin network. So that's basically the terminology used of all the computing power that is used to secure and facilitate transactions on the Bitcoin blockchain. Look, I think you're right. Let's do a comprehensive health check in a Formula 1 Grand Prix speed time. We can do a whole 1-hour podcast on just the health check altogether. So I think we covered the hash rate. And I think just quickly, I'll point out with regards to the hash rate that this year we've seen a lot of state-sponsored Bitcoin mining as well, especially from the Middle East. So that has also played a role in increasing the hash rate. And the more the hash rate, the more decentralized the network would be, and the more difficult it would be to centralize it. So over to the second chart now for Bitcoin. Over to you, Michael.
Yeah, so just real quick, just to wrap up the hash rate. So that we're looking at the geographic dispersion of kind of where all of those miners are located now. So as we can see, almost 38% of the network is in the United States. That's the number one throughout the world. Number two is China. So mainland China, which we showed the chart a minute minute ago, and there's a big drop in the middle of 2021, and that was when they banned Bitcoin mining in the country, and it went almost to zero. A lot of that hash rate immediately dispersed out to other regions of the world. The US picked up a lot of it, but now we're back to 21%. So that's pretty fascinating in and of itself.
So can I
But
quickly
we can kind of
interject and say that isn't Bitcoin mining banned in China?
I believe it is. With that said, they've banned crypto, I don't know how many times, at least 3, 4, 5 times.
Yeah.
And now, Hong Kong is one of the most active crypto markets.
Yeah.
And so it's kind of unclear what the
Yeah.
formal policy is. But yes, they did ban it.
So Bitcoin mining is banned in China, but still the latest statistics suggest to us that the 21% of the hash rate is being done from mainland China Bitcoin mining rigs. What does that tell us? You can't ban Bitcoin. You just can't ban Bitcoin. It's decentralized network. So hopefully people out there, regulators, understand that this is your friend. No matter what you try, you can't ban it. Mainland China can't ban it. And how much it is in India for our Indian viewers as well?
0.03%. So not much, Shiv, locally for you.
I need to do a lot more hard work me over here. Got it. Cool.
And I think, when you look at Russia, you're at almost 5%. Canada's up there, almost, 6.5%. Germany's is up there. Those are kind of the main.
What about land down under?
Land down under 0.36%. So a little more than India, but still pretty low.
Got it.
But yeah, it's really the United States, China, Russia, Canada, Germany. Those are the top countries for Bitcoin mining. And sort of more northern, you don't see as much in the southern hemisphere with Bitcoin mining. Let's move on with the health check here. So I just pulled up a third chart looking at total supply held by long-term holders of Bitcoin. I think you've probably seen this being talked about a little bit. We've got 14.9 million Bitcoins that haven't moved. The way that Glassnode defines long-term holders is that the coins haven't moved in over 155 days. You've got 76% of the network that's just been holding on for dear life with their Bitcoins. So this is always a positive side. And you can see in the chart there's a direct correlation between long-term holders selling their coins and what happens with the price. Obviously, when you see that number rising, it's typically in a bear market.
Yep.
And when you see it coming down, it's an indication that you're in a bull market. And so the takeaway that I have for this is when the price of Bitcoin's up 160% for the year, but we haven't seen long-term holders start to sell just yet. So that's kind of interesting. So the real bull market hasn't really started in my view. And that's kind of the takeaway for me.
Totally agreed. And for our friends in TradFi who are equity research analysts and new to crypto, this is pretty much like the Berkshire Hathaway stock. Nobody really sells it and they keep on value accruing, not sharing that much of dividends. And eventually one stock of Berkshire Hathaway is in 6 digits in US dollar. So somewhat over here, we don't see the long-term holders actually selling. That means less supply on the market and thereby, the demand increasing. Economics 101. Great chart to look at.
Interesting setup considering, we potentially have some ETFs coming and, what does that mean in terms of the supply? Moving on here, just one more chart, just looking at kind of long-term holder positioning. What we're looking at here is net position change. Same idea, long-term holders, coins haven't moved on chain in over 155 days. Again, you see over here, the price of Bitcoin's up 160%, but we haven't seen long-term holders moving coins just yet. So that is an indication that we're kind of in what I would say is sort of the early innings of this. With that said, we have moved quite a bit, so I would expect a little bit of volatility moving forward. We'll see, but that's again something we always look at is what are the long-term holders doing, because that's really important.
Absolutely.
Another kind of health check that we tend to look at with Bitcoin is average costs to mine one Bitcoin. This is, when you think of Bitcoin as a digital commodity, commodities tend to find their price bottoms when the cost to produce the asset meets the market value. And you can see in this chart that largely is what plays out with Bitcoin. And when you're in a bull market, the market price separates from the cost to produce the asset. So the average cost to mine one Bitcoin is around $40,000 right now. So that's one way to think about the floor price for Bitcoin. It's another indication that's about around where the price of Bitcoin is. So the bull market hasn't really gone into high gear. You can see that, in the past periods in 2021, the last cycle, we separated. Same idea in 2019 when we had a little bit of a bull run during the last crypto winter. It's separated again. Same idea back in 17. So we haven't seen that just yet, but that would be an indication that the market's getting pretty overheated when price separates from the cost to mine.
I think for our Canadian and Australian listeners, because the Toronto Stock Exchange and the Australian Securities Exchange have got the most concentration of resource companies, because Australia and Canada both are extremely resource rich nations and their economy depends upon a lot. And there are a lot of gold mining companies in both these stock exchanges. For both these countries' listeners, they would resonate that back in 2011, 2012, we had the peak of the resource bull market. And then we started seeing a decline in a lot of gold stocks and a lot of resource stocks. And suddenly, in a matter of 5 to 6 years later on, the cost of producing gold through those mining operations and was more expensive than the market rate of gold per ounce. That is generally an indication for a lot of people to gauge that, okay, gold as a commodity is undervalued. Similar concept over here. In Bitcoin mining companies compete with one another in a battle of computation. And that's what the hash rate that we covered initially. Because of that, there is electricity cost. There are a lot of variable cost that goes into a Bitcoin mining rig in setting up a Bitcoin mining operation. And so the average cost of producing and mining one Bitcoin across the board, some countries, it will be less. Some countries, it would be more depending on the access to renewable energy, access to cheaper forms of energy. But the average cost to mine one Bitcoin is approximately $40,000. That just gives you the indication that we are definitely not in a bull market. Because in a bull market, like this chart says, and like Michael, you alluded to, like we witnessed in around 2021, and we look at this chart right in front of us, I mean, the price was so far ahead. I think Bitcoin is fairly valued, especially when we look at this model. But yeah, a lot to do before we see the hyper-Bitcoinization, as we say.
I think so. And yeah, I mean, just looking at the last year or so, just seeing the average cost to mine being so high, like above the price of Bitcoin, and to have the miners just to see the hash rate, which we showed earlier, continue to rise, even though it was unprofitable to mine during those periods. Not for everybody. Some of these miners have just massive scale and they're leveraging like renewable energy, hydroelectric energy that's really cheap. But yeah, interesting to see that like even when it looks like a lot of miners were losing money, the hash rate was still rising, just showing the bullishness of the mining community. So
yeah,
super interesting. Let's move on to stock to flow. This is like the famous stock to flow rainbow chart, kind of an interesting logarithmic chart. So it's a scaled out view of sort of the entire like adoption phases of Bitcoin, and the vertical dotted lines denote the halvings. And so we can see that we are coming up on the next halving here. The color scheme that you're looking at is essentially denoting the days until the next halving. You see it through each cycle. These are like 4-year cycles, and you kind of see just almost a remarkable pattern that tends to occur throughout these cycles in terms of like the number of days that it takes to sort of peak, for the price to peak after the halving, the number of days it takes for the market to typically bottom out and then start to rebound. And you kind of just see some interesting patterns. But yeah, this is just a view of like, okay, if it continues to follow this type of pattern, where does the price get to sometime next year, maybe 2025? Who knows? Nobody knows if this will continue to play out the way it has.
Yeah.
But it gives you an idea of, a nice look back on what we've seen in the past.
Absolutely. For all our listeners and viewers out there that are like, what the hell is this stock to flow model? We just want to assure you that in the new year, we'll do a special episode where we dedicate at least 15 to 20 minutes just explaining what the stock to flow model is. There's a person in crypto Twitter called Plan B that came up with this stock to flow model, and it's something that can be applied to a lot of resources or commodities that are limited in supply. This person, Plan B, that goes by the pseudonym Plan B, applied that to Bitcoin, since Bitcoin has got a fixed supply of 21 million and it halves after every 4 years. So we'll explain this because it's a chapter by itself, and we'll dedicate a full episode in the new year where we explain the stock to flow model. But for anybody new that are hearing it for the first time, at least now you're exposed to this model, which is very important for anybody who is into Bitcoin analysis. Wouldn't you agree, Michael?
Yeah, 100%. And maybe just to wrap up that discussion, I think it would be great to do a full episode on this. But yeah, stock to flow is essentially measuring the number of years it would take to produce the current supply of the asset. Bitcoin and gold are right around the same right now, but Bitcoin becomes more scarce over time because the number of new Bitcoins that can come into the market drop every 4 years. Bitcoin becomes a harder asset over time versus gold, which has like a 2% inflation rate or so, we're always finding new gold.
I mean,
After this next halving, the stock to flow for Bitcoin will go to 120, and it's around 60 right now. So it'll be almost twice as hard of an asset as gold after this next halving, and then that just continues to compound on itself every 4 years. It's an interesting analysis. Plan B, made this famous, but yeah, we should talk about it a little bit. Go into more detail on a further episode.
Absolutely. And I think now there are a lot of indicators that we can include in our health check, but why don't we finish it off by talking about the famous market, the DGen favorite indicator that everybody puts on their TikTok and Twitter, fear and greed index.
Fear and greed index, again, a nice way to just sort of tell what's going on in the market. We've had a pretty significant move in Bitcoin, and so there's definitely some greed out there, and that's what the reading is indicating right now. We're at 74. So, you've got the sort of measurement down here as well. We're in greed right now. So that's something to look at. With Bitcoin, you always just expect like volatility. So it can be volatile to the upside, like we've seen over the last 2-3 months, and then volatile to the downside. In bull markets, we will see multiple 30-40% pullbacks during bull markets, right? So I think that's important to keep an eye on. And like a lot of this has to do with leverage. So the market gets heated up, people get really confident, they put on leverage, and then that greed ultimately turns into fear pretty quickly.
For people who might be confused that on one side we are saying that Bitcoin is fairly valued, and then we showcase the fear and greed index, and we're like, okay, it seems like the sentiment is mostly greed, which means like it's probably overvalued the market just now. This is where you need to be keeping in mind that there is fundamental analysis, and fear and greed index is more of a sentimental analysis. Just like how in the traditional markets, you look at, what the sentiments are out there by looking at the news, by looking at fear and greed index for a lot of the equities indices as well. It's very important to differentiate that fear and greed index is not really part of the fundamental analysis. It's more part of the behavioral and sentiment analysis. It's not necessary that the behavioral analysis of a certain asset class would correlate to the fundamental analysis of it. So that's where it's very important to keep in mind and not get confused that while this chart indicates that we are probably overvalued, the fundamental analysis of Bitcoin indicates that it's fairly valued at the moment, and we probably haven't reached that stage of the bubble territory. Wouldn't you agree,
Right.
Michael? Would it be a fair statement of what I made?
I think so. I mean, like I said, like there's so much volatility, and I always just think of the price of Bitcoin as like you're just observing human behavior. Like you're just seeing cycles of fear and greed, fear and greed, fear and greed. When you're investing through that, your job is to like understand what the fundamental value of the thing is and have a long-term view of it. At least that's how I think about it. And this is just sort of more of a short-term thing that you're curious what sentiment looks like, give it a look, but it's not something I don't spend a ton of time on this one to be honest.
Me too. I'm not a fan of this, to be honest, but I know that this is very popular among the degens out there, and I say it with all due respect to them. But they love putting a Bitcoin fear and greed index to tell whether it's overvalued or undervalued. All right, Michael, I think let's cover the last of the cycle indicator, the MVRV score, since we touched upon stock to flow model. I think this is also important that we talk about it. So what is MVRV Z-score and what does it tell us?
Yeah, so MVRV, this is kind of one of my favorite like cycle indicators. And what this is measuring is market value to realized value. It's kind of like and realized value is a proxy for the cost basis of all the Bitcoins that were purchased. And it's using on-chain data to look at that. It's a proxy. It's not an exact estimate, but we can see like it seems to be very accurate in terms of like predicting price peaks. So if you go all the way back to like even going back to 2011, 2012, when the market value to realized value shoots up into this red zone, it tends to correlate with the peak of the cycle. And that has remained true for every cycle we've looked at. It's a great indicator to identify the peaks, but it's also a great indicator to identify the bottoms, when you want to be buying, which is really when the market sentiment turns extremely fearful, like when an FTX type event is happening, everybody is kind of running for the exits. That has historically been the time to buy it. You can see that if you look at look at the chart here, when you get into this green zone, we had a pretty long period of time in this last cycle to be accumulating in this. We've now come out of that green zone, so we're still certainly not into like an overheated range in terms of market value to realized value, but we've come out of that like probably optimal buying zone, I would say.
Yeah, look, absolutely. MVRV Z-score is also my favorite, a close second to the stock to flow model that I look at and actively monitor when looking at Bitcoin and what its future price movements could be. I think this metric also deserves a similar style episode where we deep dive into how does it equate all this? Like, what is the methodology behind this? So we'll deep dive into, but for this episode, I think at least our listeners are getting exposed to some of the important frameworks out there that a lot of institutional Bitcoin analysts use. So thanks a lot, Michael. And thanks a lot to Look Into Bitcoin and Glassstone for providing this information to us.
Absolutely. One last just sort of like health indicators, just the 200-week moving average. A lot of these signals are really good for like identifying bottoms in the market. We're not at a bottom right now, but you can see that when price of Bitcoin has historically touched the 200-week moving average or gone below it, that has always indicated the bottom of the cycle as well. We had one of those periods over the last year or so, 2022, part of 2023, where the price actually dropped further below the 200-week moving average than it ever has. So that was kind of a unique thing we saw in this last crypto winter. We have broken out of that, which is really a strong bullish indicator. So we just broke through it. And like when you go back on the chart, you can see these periods where you just broke through here back in 2015 and we didn't come back to it for a couple years. Again, just broke through it coming out of the crypto winter in 2019. We didn't revisit it, but that was a kind of once off. That was COVID. We revisited it there, came out of it again, and we revisited 2 years later. So this is a very, I would say, bullish indicator that we've like strongly broken out of the 200-week moving average. But curious to get your thoughts there.
All I'm going to say at this juncture is that for guys out there, none of what we are telling you is financial advice. Do your own research, but hopefully whatever we're explaining in our attempts to educate the masses on the fundamental analysis to do these price predictions, do your own research, and you're getting exposed to the educational research frameworks that are available out there through these platforms so that you can make your own decision. All right, Michael, I think it's time to go on chain. We've already gone on chain, by the way, but I think now it's time to go on chain with Token Terminal.
I'll see you inside the terminal.
Love it. Cool.
Here we are, just going into the terminal now to just look at some more data with Bitcoin, and then we're going to get into some 2024 predictions here at the end of the show. But looking at just the circulating supply, we've got the halving coming up here in April. So about 5 months away from the halving, the circulating supply is going to drop to 900 new Bitcoins coming out per day to 450 new Bitcoin. So Bitcoin is an inflationary asset. I think there's sometimes people say it's deflationary. What they actually mean is it's disinflationary. So there's less and less inflation coming out over time. And so we're going to have less inflation starting next April. Currently, the Bitcoin network has about 93% of its supply in the market. We're getting to that point where there's just going to be much less Bitcoin coming out in the future. And yeah, just a kind of an interesting view here of like, you know, this chart is growing, obviously, right? So there's a little bit of inflation, but that inflation just keeps dropping and dropping and dropping over time.
Absolutely. And yeah, for anybody new to Bitcoin, just got in, first time you're seeing the rundown episode, 93% already mined. Only 7% left. Does that mean that we're going to see Bitcoin mining completed in the next 7 years? No, this will get completed in 2140. And that's why the point that Michael raised, we're going to see inflation for the Bitcoin network decrease at such a level that it wouldn't even look like there is any inflation after a certain time. I mean, unless somebody comes with incredible medical innovation, Bitcoin network and the Bitcoin mining algorithm will outlive us because the last Bitcoin would be mined in 2140. So currently it's 900 Bitcoins per day, right?
900 per day currently, correct.
And we're going to experience Bitcoin halving in a few months' time. That time it's going to be 450 Bitcoins per day, right?
That's right.
That's where, again, stock to flow model comes into play. We're going to see the supply decreasing by 50%. And when supply is decreasing, I mean, the best case out there for people outside crypto to take the analogy from is diamonds, right? I mean, De Beers controls the diamond supply and they artificially make sure that the supply isn't out there, out in the public. And that's why the price of diamonds have increased. It's another story that now we can make lab diamonds that are somewhat similar to diamonds at 1/10 of a cost that is giving
Right.
the real diamonds the run for its money. But yeah, like Bitcoin supply is going to drop by 50%, and we probably are going to see some price increase then as a result of just that.
Yeah, and if you're a miner, the price has to increase, right?
Okay.
So if the commodity that you're mining is decreasing in this supply that you can actually access, and that's the product that you produce, that's what miners are doing, the amount of product that they can produce is going to drop by 50% in a few months. And so for them, price has to go up, or they have to shut their machines off. And the other piece of this is transaction fees, which we are looking at here. And this is just over the last 180 days or so. But these are the fees that users are paying to transact on the network. We've seen this pretty big spike over the last few months or so. And really, this kind of started, like, if I zoom out a little bit here, this started at the beginning of the year. We saw this huge spike in transaction fees, which, by the way, got past where we were at the peak of last cycle. And people are probably wondering, like, what's going on here with these spikes? And right now, we're back to almost like all-time highs in fees. What's happening is Ordinal's protocol on Bitcoin, which is kind of like a way for other coins to be minted on Bitcoin. Bitcoin historically was always just Bitcoin. That's the only coin that was on the network. Ethereum has Ethereum, and it has all these other coins. And Bitcoin was always just a single asset network. There are new protocols. There's innovation happening on Bitcoin, and that is driving these fees. So it's pretty interesting. This has become somewhat controversial in the Bitcoin community, where there's sort of like Bitcoin maximalists or fundamentalists that believe that it should only be used as a payment network and that we shouldn't build these other things on the network because it can create congestion and drive up the transaction fees. Obviously, miners are not going to agree with that because they're in the business of earning some of these transaction fees. And from my perspective, I'm curious to get your thoughts on this, Shiv. But from my perspective, I just completely disagree. Bitcoin's a permissionless network, and so anybody can build whatever they want on it, and the free market is going to decide if people want to use that protocol or not. And if it's driving up the fees, it's driving up demand for Bitcoin's block space. And if that's causing problems with, transaction fees on the network, if you're just trying to make a payment, to peer-to-peer payment or something like that, that's what Lightning Network is for. You can transact on Lightning at fractions of a penny. It's hard for me to understand the fundamentalist view that this is for financial transactions only. I really don't understand it. I think it's actually rooted in ideology, and that's why it doesn't actually make sense. But yeah, curious to get your thoughts there.
Yeah, so I think this episode is going to be the most trolled episode because of what we are discussing, and that's okay. That will increase our engagement, so keep it coming. But yeah, I agree with Michael. It's a permissionless system. People can do whatever they want with it. That's the whole point of a decentralized permissionless network. So if somebody wants to create non-fungible tokens using the Bitcoin network, so be it. What it's going to do is going to drive innovation. Challenges will drive innovation. I think Bitcoin is the most decentralized network and people can do whatever they want with it. But that's the thing about ideology, right? Without going further into religion, but any form of ideology, it's like people think of it religiously and you can't really logically reason with it. So let them be what they want to be, and let the innovators do what they want to do. Let the non-Bitcoin maximalists talk whatever they want to talk. But yeah, Ordinals, it has showcased that you can do more with Bitcoin rather than payments, and I think that's a good thing.
Couldn't agree more. All right, let's move on here to the next start. Looking at core developer activity, this is part of I guess you could kind of lump this in with kind of health check type indicators. I've observed the developer activity actually dropping off a little bit. I'm actually surprised to see this, primarily because with ordinals and new innovation on chain, you would actually expect there to be newer developers coming onto Bitcoin, and you would see this actually jump up. There may be an anomaly in the data here that's indicating this, and there's certainly a number of different ways to track developer activity. This is coming from Token Terminal. It's coming from GitHub repositories, right? Those are off-chain data sources. It's an interesting thing to look at. We'll see if this continues, this sort of drop off in developer activity. And the other thing, like I've observed historically, is you actually see this almost every year at the end of the year. And it could just be that people are taking vacations or there's just the holiday seasons, but you tend to see developer activity drop off at the end of the year and then pick up again going into the new year. But yeah, curious if you have any thoughts on just
I think you've explained it pretty well. It makes sense. Developer activity is done by human beings. They go for end of year holidays. It is important. I think seeing developer activity is more important for non-Bitcoin projects. I think, Michael, that when we cover non-Bitcoin projects moving forward, I think let's bring developer activity, especially for the ones that are not that known projects, because that's where we would be providing value to the users rather than seeing prices go up and down. I think seeing the developer activity for a lot of altcoins outside the top 20, that's where you really get the fundamental analysis of it, that are there people really working, or is just PR that is driving it? But look, thanks for bringing it up.
Absolutely. All right, moving on here. So trading volume, this is another one we've just been kind of keeping an eye on. Like, this is a good indicator of just sort of sentiment in the market as well. We can see it is coming up a little bit. It's still not anywhere near where we would expect to see this, like in a frenzied sort of hype cycle. You know, we were getting up into the 70 billion range. We had days over 100 billion trading volume for Bitcoin. So currently we're in the 20 billion or so, a little less than that, between 10 and 20 billion per day. Not quite where you'd expect this to go. I expect this to get pretty interesting. And one thing to think about with this is this cycle could be more of an institutional type adoption cycle with the Bitcoin ETF. The trading of the ETF will not be occurring on chain, right? So it'll be a little bit different. Some of these data sources are going to be start to looking at, you know, this is obviously looking at exchange activity, but it's actually Bitcoins that are trading. When it's an ETF, it's a wrapper of those Bitcoins, and the Bitcoins aren't necessarily moving in the background. So some of this important just to realize that as the market structure expands, as traditional finance starts to get involved with crypto, the data is also going to evolve and move around a little bit. So something I've been thinking about. Well, but yeah, curious if you had anything to add on here.
I think great points. And just on that, like the Wall Street institutionalization of crypto that is going to come in the form of spot ETFs. I'm just wondering what's going to happen. There are going to be different scenarios that we're going to be talking about week after week. 2024 is going to be an exciting year for us. But yeah, like if spot Bitcoin ETF with a behemoth like BlackRock gets approved, and it seems like it's a matter of when, not a matter of if, when it gets approved, what's going to happen to the exchange supply? Does that mean that market makers are going to play a more important role? Are they going to be compensated for that? So is Bitcoin market making and actually a good business coming out onto 2024 because of the spot ETFs basically hodling the actual Bitcoin? And that means for the exchange activity, there's going to be just less liquidity out there. So 2024, I think, is going to be a very interesting year for at least us at the Rundown, because like you said, market structure is going to evolve. What data we need to monitor. There's going to be new data that we need to monitor as well. Looking forward to 2024.
Yeah, great points. And then just to wrap up, another data point I've been taking a look at, and this is related to ordinals as well, is transactions. So on-chain transactions are at almost an all-time high. I'm going to zoom out on this here. They are actually at an all-time high. I misspoke there. So yeah, I mean, it's interesting to see just the evolution of Bitcoin happening in real time here. As you introduce more innovation on-chain, we're seeing Bitcoin. I wrote an article called Bitcoin is Going Through a Paradigm Shift when ordinals first came out. People can check that out. But I was trying to map forward, like, what does this mean for Bitcoin? And if you can start to store data on-chain, and the way that this is being done with Bitcoin is a little bit different from like NFTs and where the actual metadata is stored. With Bitcoin, the actual metadata is going on chain. So that means, you know, something that I was writing about and I was thinking about was, what does that mean? What could go on Bitcoin? What would be the stuff that you would want to be stored on the most secure computing network in the world? Could it be real estate titles? Could it be financial asset data and different things that are like where you would want that security? It's very interesting, but it's interesting to see it playing out with transaction fees on the network. That is obviously really good. If you're a miner, you're excited about all this stuff.
Absolutely. Another great segment of Going On Chain with Token Terminal, Michael. Great wrap up now. Let's come back to now the topic of what to expect with Bitcoin for 2024. What are some of the topics that will bring the limelight and headlines to Bitcoin? What is your number one headline that you think that is going to come up in 2024 for Bitcoin?
These are so hard to predict. You know, obviously, we're going to throw some stuff out there today. We'll have to come back and revisit this episode to see if we were right about any of this. But, you know, one thing that comes to mind, and these are sort of big ideas and things that come about when you go through another adoption cycle. But something that's on my mind is like, is it possible that this experiment that we saw with El Salvador adopting Bitcoin as legal tender, do we see another Latin American country potentially move in that direction? This is not something I've been following super closely to see. I know Argentina just got a new president and they're talking about moving to the dollar, but this new politician that's in place has talked positively about Bitcoin as well. So that's something I'm curious to see play out, because if the price of Bitcoin really starts to rise, like El Salvador is going to look brilliant. Everyone's going to start to say, wow, interesting.
Totally agree with you.
Yeah.
I think this topic topic is going to continuously be playing out. We're now reached a point where people are not going to talk about banning Bitcoin anymore, and it's going to be more about let's legalize it. Let's adopt it. I do not know whether we're going to see countries apart from Argentina going out in public and saying, yes, Bitcoin is a legal tender at par with their national currency, like what El Salvador did. But I think we're going to hear increased speculations from countries that are looking at Bitcoin in a more positive tone as what they have in the last 15 years.
Yeah. And then the other thing that I've been thinking a little bit about is in the United States, we are going into an election year. It's an exciting time to be alive over here. And you've seen some of the politicians that are coming into the limelight. Bitcoin has come up. I would say it's not one of the top subjects that's being debated currently, but it's possible that it becomes into the mainstream more, especially if you're in an adoption cycle as these debates are occurring and things like that. So that's another thing I'm looking for. And just looking at some of the numbers in terms of like crypto and politics in the United States, a lot of the studies that I've looked at have indicated that more Democrats own crypto and Bitcoin than Republicans, which is sort of, a lot of people assume it's more of like libertarians and probably more Republicans, and like the data doesn't really reveal that. So I think that's interesting, and that could actually play a role in how politicians approach it. The other thing is, I think within Congress in the United States, there's this view that it's sort of like the Democrats are sort of opposed to crypto and then the Republicans maybe a little bit more supportive. I don't really see that. I actually see more of generational thing where the older people in Congress are generally opposed to this and the younger people are for it. So there's plenty of Democrats in Congress that are sort of pro-crypto, pro-innovation. The perception is that it's sort of divided on party lines. I think it's divided on your age groups.
And look, we got one of the front runners from Republican Party, Vivek Ramaswamy, who goes on and talks a lot about Bitcoin. And he's very controversial, but at the same time, given that he comes from the private sector with no political career beforehand, not really, and he's still so young, under 40, and coming up over there talking pro about Bitcoin and what are the things that he's going to do in order to get the economy back up and running. He's getting popular because of that Bitcoin narrative as well. Exciting time. Next year, the two biggest democracies in the world, United States and India, both go on the voting booth. It couldn't get more bigger stake if you are a political student. The two biggest democracies with a combined population of 1.8 billion going to the voting booth. And Bitcoin is going to be a topic to talk about.
Yeah, I mean, if you're a politician, it is interesting. I love like this game theory with Bitcoin, and I sort of think it applies to politicians as well, especially young politicians. I think they're going to look at the numbers, and if you're a younger politician, you're probably supporting this. So I think that's pretty interesting.
Yeah, let's just quickly talk about our friend Michael Saylor. And what do you think is going to happen with Bitcoin and corporate treasury adoption?
It's an interesting one. I think he's still out there buying Bitcoin. I mean, the guy's just an animal. He has not backed off, his whole thesis, and he's still out there, and they're executing a corporate treasury strategy with his business. So pretty interesting. I think it's possible that there's going to be a lot more people joining him in this, especially when an ETF is out. So there's a few things here. Like number one, you have an ETF, so it's easy to custody the asset. One of the hardest things for any large corporation is, do we really want to try to custody this asset? That's like one thing that's been a hindrance towards adoption. Then the other is the accounting rules. So we actually just changed the accounting rules, FASB in the United States. We changed this to like fair value reported. So it used to be that Bitcoin and crypto at large were treated as goodwill on your balance sheet. So if the value went down, you'd have to write it down. But if the value went up, you weren't allowed to write it up. So now it's just getting fair value treatment. You're going to market to market on your balance sheet. That's really important. If you're a CFO of a publicly traded company, that's like really important. So I think there's two things that are pointing us towards more corporate treasury adoption. What does that look like? Is it 1 or 2%? If that is the case, that's a pretty big deal. But yeah, I think we'll see more of it. That's kind of my the takeaway, I guess.
What about the asset allocation of high net worth individuals or clients of registered investment advisors? What are we going to see? 5%, 2%, 1% allocation to Bitcoin now?
It's interesting. RIAs control, I think, close to 40% of the wealth in the United States.
Oh, wow.
They're compensated for managing their client assets. And so they're essentially getting paid fees to put different assets into portfolios. So they're incentivized only to recommend assets that they can put into their client's portfolio and custody. Again, this is a custody issue. They couldn't really recommend Bitcoin because now they need to have a separate account on an exchange, or they need to self-custody the asset. They can't do that for their clients. So if you have an ETF and it just goes right alongside all the other assets in a client portfolio, now the registered investment advisors are actually incentivized to recommend it because they can make money by recommending it. So I think it's a big deal. What percentage are they going to start recommending? Again, if it's 1 to 3%, something like that. If you have an allocation of gold, maybe you should go 50-50 with Bitcoin and gold. That can move the needle over time. I don't think it's like a huge sort of frenzy for everybody to go get their Bitcoin, but I think over time people just start treating it as a diversifier in their portfolios.
All right. So just quickly now, I think it's important that we give a balanced analysis or balanced commentary about what to expect. With that in mind, we can't close off this episode without talking about the risks. So, Michael, I got my own theories, but I'm interested to get your take first as to what do you think are the risks out there just on Bitcoin? What could go wrong to derail the current momentum?
Yeah, I mean, things will go wrong for sure. What's interesting to me is when you're in a bull market, bad news doesn't really get priced in. When you're in a bear market, good news doesn't get priced in. There's going to be a bunch of FUD, fear, uncertainty, and doubt. I'm sure that comes back. We're already starting to see that. Like Jamie Dimon went in front of Congress, said he wanted to ban crypto and Bitcoin. We're just going to keep seeing this. It's the same story. We've seen it. There's nothing new coming in here. It's the same thing. It's criminals. It's bad for the environment. Like, I just expect that. That's one thing. I expect to see a repeat of human behavior. So too much greed when we get into these cycles and people misuse leverage, and then that will cause lots of volatility. So I expect to see more of that. I always say, like, Bitcoin's not volatile. Humans are volatile. And that's what you're seeing. You're seeing human behavior expressed in the chart, but Bitcoin isn't volatile.
Absolutely.
It's actually very stable. That's another thing I expect to see, like something that's somewhat concerning, the geopolitical situation. People like Senator Warren in the United States try to point at crypto as the thing that we need to stop and not the terrorists themselves, which is a little bit odd. But yeah, if you get into like a weird thing with a bad actor using crypto in some way, it becomes something that could get caught up in the crosshairs of messy politics.
Yeah.
That's something that concerns me a little bit. The other thing is, like, if the thesis that everybody's I think a lot of people in Bitcoin sort of think that the fiat system is kind of unsustainable over like a really, really long arc. Nobody knows like how long that arc looks, but if it's shorter than what we think, that could actually be concerning, because if like something happened in the traditional financial system, we had like really high inflation or something in the US or in other parts of the world, and people were going towards Bitcoin, you would imagine that there might be capital controls put into place by governments. The ideal scenario for Bitcoin is like it just kind of keeps doing what it's doing, and like the fiat system just kind of keeps doing what it's doing, and they actually are sort of helping each other. The fiat system helps Bitcoin. You wouldn't want to see a situation where that sort of unraveled too quickly, because it would be too chaotic, and I think Bitcoin would get caught in the crosshairs of that pretty quickly.
Totally agree. I'm a fan of the book The Bitcoin Standard by Seth. I have deep respect for a lot of people who have come on Proof of Work podcast as well, who say that they are okay to transition to a Bitcoin standard right from 2024. But in my humble opinion, I agree with you, Michael. I think they both need to coexist, because Bitcoin network isn't as massy at the moment to replace the incumbent financial system, or Ethereum or the other crypto blockchains are nowhere near in replacing the incumbent financial system. So at least for the foreseeable future, they both need to coexist to keep each other healthy. It's a great point that you raised, and just want to close off by saying that what a great point that you raised, man. Whatever happens in Bitcoin prices, that's a reflection on human society and the sentiment. FTX goes bankrupt, CZ pleads guilty, Bitcoin blockchain creates a new block after every 10 minutes. It doesn't care what the hell is happening by FTX or CZ. They don't care. The Bitcoin network doesn't care. 21 million Bitcoin. It was started on 3rd of Jan 2009. We're now in December 2023, still 21 million Bitcoins by 2140. It doesn't matter whether Trump gets elected. It doesn't matter whether the people of United Kingdom vote to get out of Europe and the Brexit happens. Bitcoin network doesn't give a damn about anything. It's the most purest, mathematical, limited supply, commodity, network, decentralized, all that. I'm spitting out words, but I get passionate about this, that people do not realize what they have got now for the last 15 years. Bitcoin doesn't care about humans. Bitcoin just do what it was supposed to do. And it's a very important innovation for the human society.
I think that's really well said, and probably a good place to end this. This was an action-packed episode, a lot of data. We get into a lot. Yeah, I hope everybody enjoys the episode.
Amazing. Thanks a lot, Michael. And yeah, please leave your comments. Your comments help us to improve. If you like it, let us know that you like it. If you don't like it, tell us why you don't like it so that we can improve in future episodes. But again, thanks for tuning in. Thanks for all the views. Thanks for all the love that you guys are giving both me and Michael. See you next time.
Thanks, everyone.